he's a very big player and has a lot of exposure. And what we saw was the biggest leverage buyout deal of the year with Citrix. The banks that underwrote that, including Credit Suisse, couldn't get that debt off their books. And so they had to take some mark-to-market losses there. It's looking like some other large LPOs that are in the works might also be quote-unquote home deals. So that's a potential risk. None of it seems to be the size that would really take down a bank per se. None of it is along the size of the losses suffered by after the Archegos situation. But situations like that are especially as you see the stock price fall, and you see CPS go up, it starts making investors a little weary. A number of banks that report this Friday, do you expect Credit Suisse to come up on the conference call? And how do you expect CEOs like Jamie Dimon to respond?
I think everybody's going to ask, what's your counterparty exposure to Credit Suisse? Are you concerned at all? And I anticipate, a lot of reinsurance is basically from the American consideration saying, look, our capital versus pre-financial crisis back in 2008 is more than double the way it used to be. We are prepared for a storm. We are prepared for Jamie Dimon's hurricane to come. And when it does, we'll be fine at any rate.
Well, fascinating. So we're continuing to unfold. Kingston and Wesley Picker, thank you both very much. All right, coming up, skyrocketing mortgage rates aren't derating plans to purchase homes over the next year. We have the surprising results of a new housing survey. Plus, the NASDAQ 100 coming off its third negative quarter in a row for the first time since 2003. And there are names that could power higher in the coming months. We've got that list. Before the break, a look at Carnival, which is giving up earlier gains. The stock hit a 30-year low on disappointing earnings on Friday. That stock down today.
I'm getting vaccinated. It's not my one.
So am I. It's a common risk for pneumococcal pneumonia. I'm asking about Prevnar 20 because there's a chance of pneumococcal pneumonia and put you in the hospital.
If you're 19 or older with certain chronic conditions like COPD, asthma, or diabetes, you may be at an increased risk for pneumococcal pneumonia. Prevnar 20 is a proven dose to help prevent infection from 20 strains of the bacteria that cause pneumococcal pneumonia in just one dose. Don't get Prevnar 20 if you've had a severe allergic reaction to the vaccine or its ingredients. Adults with weakened immune systems may have a lower response to the vaccine. The most common side effects were pain and swelling at the injection site, muscle pain, fatigue, headache, and joint pain.
I want to be able to keep my class.
That's why I said to get vaccinated with Prevnar 20.
Because just one dose can help protect me from pneumococcal pneumonia. Ask your doctor or pharmacist about getting vaccinated with Prevnar 20 today.
Whatever happened to Chucky?
What's coming to her? It's in the conversation. It's just a dog. I'm afraid. Chucky, I'm 6 pounds over 50. I'm inside. And we're all ahead. I can't look for them. Things get shaky. And this combination of colors and useful.
Kindle planning to help extend the life of your engine to something up to 15 years, 500,000 miles each year. That's like hitting the open road and driving from Key West End 100 times. Here's all those made from natural gas. The proof is in the pencil.
Welcome back to Power Lunch. I'm Christina Portanellis. Peloton is firmly in positive territory today as the company strikes a partnership with Hilton that will see at least one bike in all 5,400 Hilton-branded hotels in the United States. The majority of the locations are expected to have their bikes by the end of this year. And as part of Peloton's wider turnaround efforts after peaking early in the pandemic, the stock though still down about 80% this year, and hit a fresh all-time low of $6.66. That's $6.66 in today's trade before rebounding. Tyler?
All right, Christina, thank you very much. There's a lot of talk about a housing recession, mortgage rates spiking and sales softening, but according to a new survey, potential home buyers are upbeat about their prospects. Joining us now is the analyst behind that survey, John Lovallo with UBS. John, welcome. Good to have you with us. I mean, I have to say that some of the numbers in here seem outlandish to me, to be honest with you. 44% of respondents plan to buy a residential property over the next 12 months, the highest reading since the survey began in 2014. That's 2 out of 5 people. Who are you surveying exactly?
That's a good question, Tyler. Thanks for having me. It's a wide-based survey. In fact, this housing intention survey is from our evidence lab here at UBS, and it's been going on for years. It's one of the longest-standing housing surveys on the street. So it's a wide range of folks that were surveying across demographics, across ages, and so it's a pretty unbiased account here.
How big is this, or how many people are surveyed?
Over 2,000.
Over 2,000, and it is not high-income skewed, it is just the general population.
Correct. And there's some other interesting things that came out of this. I mean, you mentioned the 44% of respondents that would buy a residential house, and that was a record. 70% strongly agree that owning a home is a great investment. 80% didn't view affordability as a major problem. And 90%, believe it or not, believe the value of their home would be higher in 6 months. Now, that's really important, particularly given what's being contemplated in the stocks right
Now,
now.
wait a minute here. My note says 78% of respondents versus 66% in June believe that finding an affordable home would be, quote, somewhat to very easy. Somewhat to very, but wait a minute. Interest rates have gone to 7%. Prices may have come down a little bit, like 1% in the past 2 months, but that's not, I just don't believe that. I just don't believe that people think affordability is no sweat, it's a layup.
You know, Tyler, it was surprising to us as well. And the numbers are the numbers. So let me put a little perspective around it. One, I think that if we look at what happened in August with new home sales, interest rates came down a little bit. It showed that there was a lot of demand elasticity. I mean, that's a print of 685. That was up 29%. Sequentially. Now, also keep in mind, we've been talking about this for a while. There are a lot of levers that first-time home buyer can pull. They're living a little further away from the city. There's a huge generational wealth transfer, immigration, and so forth, not to mention student debt relief. So we believe that first-time buyer that's driving things here today in the market is still reasonably well set up. And if they can buy it, they will buy it, even if that means buying less.
Mm-hmm.
And the price of homes, I mean, it's falling fast. The biggest monthly decline since 2009. I'm curious, looking at the data that you ran, John, and the survey, what does it tell people who are watching right now how to invest in home builders, the sector you cover?
Yeah, it's a fair point. Look, I mean, prices were down sequentially, and I would say actually marginally. It wasn't historically a bigger move than normal, but if you look year over year, they were still up substantially. How do you invest in the group right now? I think you have to be very careful, right? I mean, interest rates are moving 20 basis points a day in either direction, so I can't sit here and tell you in good faith that I'm out there pounding the table saying now is the time to buy. What I am saying is that I think it's time to do the work on the stocks and get ready because we're heading into what is seasonally a very, very strong period for the stocks. And if interest rates can just settle, we could have what's called a hope trade, November through January trade, that could be on steroids.
What would you say to critics out there who don't believe that home builders will have the pricing power in an environment where the economy continues to soften, rates stay above 7%?
The market hasn't gone up
I think it's a
since.
very fair pushback, right? I mean, look, these are production home builders. They are going to find the clearing price for the home. They're going to sell homes regardless of what it takes. They need to. That's their job. So, you know, our view is that there's just not enough inventory in the market, right? You think about it, 90% of the market is existing homes, and there's about 3.2 months of supply. That's about half of what it should be historically and half of what it was normally. That means that there's just not much out there. And if to the extent people are going to buy homes, they're probably going to be forced to buy new homes.
Yeah, exactly. Well, we'll have to take you back and get this survey again next month, John, to see if those responses change at all. John Lovallo of UBS. How maybe
Thank you.
that is out there.
Maybe it's a little better than I'm sensing, but the idea that 40% of people are going to sell their homes or buy a new home in the next year seems
Right.
Very, very high to me, given the economy, given what our interest rates are.
Yeah, if you lock in 2%, why would you now want to deal with a 7% rate? I mean, there must be a big reason why you're looking to change.
But there are a lot of renters out there who probably are trying to get into the market for those times, so we'll see.
Quick check on markets. We are in rally mode. The Dow Industrial just below 30,000, up 2.7%. S&P 500 up 97 points. All 11 S&P 500 sectors are moving higher right now. Wow. Ahead on Power Lunch, the SEC keeping up with the Kardashians, the queen of influencers, getting hit with a $1 million fine for failing to disclose she was paid to promote a crypto asset on her Instagram. We got that story. Plus, Bolsonaro bolstering Brazil, the emerging market story after weekend's election results. Plus, recycling renewables. We'll take a look at a company that recycles solar equipment in today's New Start. Power Lunch, right back. This year, Prime members get holiday deals before anyone else, which means you're kind of a big deal. The Prime Early Access Sale on October 11th and 12th, only for Prime members.
Chicago Wednesday is TV's #1 night of draws. When this community calls, we respond. Every single day. One city. One family. One Chicago. Stronger together. Chicago Wednesday on NBC.
Social justice, fairness, democracy, it's all in my bones. I remember my father running for office in Canada when I was 11. He lost in a landslide, but he explained to me that he never expected to win. It was simply the fact that someone who looked like him could run. That's the spirit of democracy I learned from my family. People getting out there, having their voices heard. I carry that lesson with me every day.
Welcome back to today. We have a lot to celebrate on this Wednesday morning. It's good to have you along with us.
You don't know when the moment's coming, but when it does, you take it.
Everybody, ready? And that's it.
Vanilla AP pasta, packed with protein, and made with just one ingredient. We're now open for business and need to move fast. Choose from thousands of Canva templates to design your business cards, flyers, banners, and more. Design with Canva, print without the sweet though.
New Dow Foaming Hand Wash Concentrated Retail. Counter clean.
Kim Kardashian settling with the SEC on charges she improperly pumped a crypto asset. Julia Borson joins us with a look at the settlement and this whole phenomenon on influencer marketing. Julia. Well, Tina, in addition to $1.26 million payment, Kim Kardashian agreed not to promote crypto securities for 3 years and to cooperate with an ongoing investigation. At issue, she failed to disclose the payments received for promoting a security called Ethereum Max on Instagram in a June 2021 post. Investors sued her along with Floyd Mayweather and former NBA player Paul Pierce over this for allegedly artificially inflating the asset's value. SEC Chair Gary Gensler explaining on CNBC this morning how SEC disclosures are different than Instagram's requirement to tag a hashtag ad.
Also, this is a highly speculative asset class, And so when a celebrity or influencer is touting it, it's important that the public understands that relationship and are they getting paid and how much they're getting paid on their Instagram site. That's what this was about.
Kardashian's crypto promotion is part of a growing trend of influencer marketing. U.S. marketers are expected to spend about $5 billion on influencer marketing this year. That's $1 billion more than marketers spent in 2021, defying concerns that macro challenges would hurt spending in the category. And while Instagram still has the biggest percentage of spending on influencer marketing, TikTok is the one that is making gains. It's on track to overtake Facebook's market share this year and then YouTube's market share in 2024. But those influencers, they're likely to be a lot more careful when it comes to promoting securities.
Yeah, and this is really just a question of promoting securities. I mean, if an influencer is promoting an automobile or a brand of makeup, they don't have to disclose that it's an ad. This is just security. That's question one.
Well, they do. So Instagram does have rules about this. Instagram says that if you're posting something that is paid promotion, you have to say hashtag ad and make that clear. Of course, there are some people who do this frequently. There are a lot of hashtag ads. But so that is the ad requirement from Instagram. What Gary Gensler was saying is it's different when it comes to the security. We're not punishing her for not disclosing that it was an ad. She did disclose that it was an ad, but she didn't say how much she was getting paid and that this was a speculative security that she was promoting.
Did Chair Gensler get to meet Kim Kardashian? You know?
I don't know. That's one question. I'd like to be a fly on the wall.
Yeah, that'd be a good one. I'd like to be at that meeting. That'd be fun. All right, Julia, great to see you. Goodbye, Julia. Where are you going? Bye. Let's get to Christina Partsinevelos for the CNBC News update. I know where she is.
You know where I am. Let's talk about this. Sentencing is being delayed for Theranos founder Elizabeth Holmes. This after a star witness for the prosecution showed up at Holmes' house this summer and expressed regret over his testimony. A hearing about possible misconduct by prosecutors has been set for October 17th, which had been the date for Holmes' sentencing on fraud charges. The trial has begun for man charged with driving through a Wisconsin Christmas parade and killing 6 people. David Brooks is representing himself. He petitioned the court to do so, and the judge found him competent to make that decision. And the man who helped unlock secrets about human evolution says he had no idea he would win this year's Nobel Prize for medicine. Svante Pääbo won the award for comparing the DNA of modern humans with Neanderthals and other hominids. At first, he didn't believe he was now or is now a Nobel laureate.
I think I haven't quite digested it yet, actually. But I first thought this is probably an elaborate prank done by people in my group. But then it sounded a little bit too serious to me, so I sort of accepted the fact.
I think you should really take that elaborate crime.
Wow, nice. That's lovely. Christina, thanks. All right, up next, the Peloton's fourth quarter playbook as we enter the final stretch of this volatile trading year. Some breakouts in key sections for names that could provide a strong buying opportunity in the 3 months left in the year. Today, the focus is on the market's telephone child, technology. We'll be back with that.
Not seeing my tech.
No, not the market.
Nothing feels better than having support, and the same goes for your footwear. So you've got to try Skechers Arch Fit. Skechers teamed up with podiatrists and designed footwear with podiatrist certified arch support. Plus, they're machine washable. Get the arch support you're looking for with Skechers Arch Fit. Your name is Dr. Ben Song. You were the lead physicist on the time travel project, which was quantum leap and time travel into other people.
The person I looked into glass? That's it. It's an honor.
How do you make a perfectly seasoned meal? Make it with perfectly seasoned Hillshire Farm smoked sausage.
With more pros trusting Interstate than any other battery, our pros are never hard to find.
At Unified Consulting, our consulting model breaks the mold with a bespoke approach to every challenge. We unlock connections that empower the breakthrough to propel the vision and deliver with purpose. Let's unify.
Complicated heads. Just
Minutes left in the trading day, and we want to get you caught up on markets. We have stocks, bonds, and commodity coverage, and the tech playbook for the fourth quarter. But let's begin with Bob Pisani as the market rally just is gaining more and more momentum. Bob, we all are trying to figure out, does this rally have legs?
Maybe. I'll tell you what's important. It's very broad. So Caterpillar, Honeywell, Chevron, United Health, big moves on the upside, up and the down. Look at the S&P, highs for the day. And I'll tell you why that's impressive. Bond yields were down all throughout the day, but they started rising a little bit, although the yields are still lower. 10 years, 15 basis points lower. But the market still keeps moving up. That's the first time in a long time yields start moving up a little bit more and the stock market still stays high. That's a good sign. We haven't seen it in a while. Just take a look at some of the movers right now. Again, look at the risk-on sector. So metals, very strong today. Freeport's up 8%. That hasn't happened in ages. Nucor's been terrible recently. It's up 7%. Cleveland Cliffs up about 9%. Big cap technology stocks doing okay. Not amazing. Apple is on the upside. AMD, Nvidia. Let's just hold the whole thing 3%. That's pretty good given how strong the overall market is. So remember, they're moving in line with the S&P. S&P's up about 3%. How about energy? Well, again, these are the names that are the ones that would move the most. High beta energy names, big cap, Marathon, Apache, 9% though, 8%. Those are big moves. That's way outside of normal trading patterns. Finally, it's interesting, Kathy Wood's ARK funds have been doing okay. If it wasn't for Tesla, which is down 8%, and that's her biggest holding, that's really what's holding the stock down. That's the other big test you want to see of real risk on. Other than that, though, Roku, Zscaler, Unity, these are all the major holdings outside of Tesla, all to the upside. Seema, back to you.
Now, 854, Bob, thank you. Now to the bond market. Rick Santelli tracking the action there as we start to see sharp drops in yields along with the rally in stocks. Rick?
Yes, and Bob asked a great question, and maybe we can weigh in on that. Yields moving down makes sense to see equities moving up, but as they've started to firm slightly on Treasury yields, what's going on? Well, I think it's because it isn't necessarily a big capitulation trade, but it's about as close as you get. Many traders think that last Wednesday's extreme yields might be as much as we're going to see for a while, and I think that's where you're getting a bit of a green light on equities. So let's start all the charts on Wednesday the 28th. Here's a 10-year. We're a 401 intraday, which means we're about 36 basis points lower right now. But that's not all. Look at bond yields on Wednesday. They were up to 235 intraday. They closed at 191 today, down 44 basis points. These are huge moves. Look at gilts, which was center stage because of Liz Truss and all the issues around the globe of her Thatcher moment, trying to cut taxes, and of course the 45% tax rate that they pulled with respect to the rich that amounted to £2 billion of nearly £50 billion package. It was at 458, 395. It's 63 basis points lower on today's close, and the dollar index made its fresh 20-year high close at 114.10 on Tuesday, the 27th. Now, since then, today's going to be the fourth consecutive session that looks to close lower, and that's reflected in bounces in the pound and to some extent the euro. But it really underscores there's been a whole shift in psychology on flight to safety of the dollar. And today we had weak data, which also put a variety of buyers into the fixed income space, pushing yields lower. Seema, back to you.
A weaker dollar, investors will take that. Rick, thank you. Now to oil, which is rallying as OPEC considers a production cut ahead of tomorrow's meeting. So Stevens is at the commodity desk. Pippa. That's right, FEMA oil prices are bouncing today following reports that OPEC and its allies could cut production by 1 million barrels per day when the group meets on Wednesday. The meeting will be held in person in Vienna for the first time in more than 2 years, which is also fueling speculation that some sort of big move will be announced. But it is important to note that the group has been underproducing relative to quota. That means that if a 1 million barrel per day cut is announced, it will be more like cuts between 300 and 400,000 barrels per day, according to CIBC's private wealth Rebecca Babin. But she added that consensus stands that a 500,000 barrel per day cut could balance the market, so this gets pretty close. Let's check on prices. WTI up 5.3% at 83.67. Brent crude right around $89 for a gain of 4.5%. Natural gas going in the other direction on weaker weather-related demand. EBW Analytics saying it could take cold temperatures jump-starting heating season to reverse the current bearish momentum. And a quick check on energy stocks leading the S&P with a gain of more than 5%. Seema, that's performing sector right now. Pippa, thank you. Let's turn to our power playbook. The Nasdaq is down 31% so far this year, dragged down by some of the widely held names like NVIDIA, Amazon, Meta, and Salesforce. Are any being down tech names now a good buy in the fourth quarter? Brent Hill is the managing director and senior technology analyst at Jefferies. Brent, what should investors do here?
I think ultimately for tech, the pain isn't over. We still have some headwinds coming in as it relates to numbers having to be cut. And in 2023 is really uncertain. The investors are buying stocks for 23, not for the rest of this year. So I think ultimately most tech investors are kind of sitting by on the sidelines, not a lot of conviction until we get to early 23 to hear the company's outlook. Many of the tech companies have been way too bullish relative to what we think the demand's going to look like. So we're a little tactically cautious. Our economists, our strategists have all said that and have been in front of this, that there's pain to come. So we think we're not out of the woods. That being said, there's a handful of names that we like. One would be Adobe, which is powering the creative movement. They did a big, the largest deal ever with Figma, and that created a $40 billion sell-off in the market cap. Today, the deal was worth 20, so ultimately it got hit harder than the value of the deal. And this has been a story that we've stood by for many years. One of the best management teams, one of the most disruptive companies, growing 15+% with a 40% operating margin. Not many companies like this. And Figma is really going to change the game for them in collaborative design. So that's a story that we like.
Sorry to interrupt, but the names that you like are none of the widely held names like Meta, Salesforce, Apple. Tell us why you're going for these very specific niche tech companies like Adobe, Palo Alto Networks, Match, versus some of the widely held ones.
Well, I think the widely held ones like Microsoft have done well. We like them. What we're looking for are names that are dislocated, where there's been some event, or we feel good that if the environment gets worse, that these companies can hold up. So Palo Alto Networks would be a name that would hold up. Cyber spend will continue, and this is one of the best management teams with an incredible track record, taking market share that we have believed in for quite some time and still believe. So Palo Alto will be able to kind of fly through any economic headwinds. If we continue to see layoffs, Microsoft's going to lose altitude as it relates to their seat sales, and there could be another number cut, and with the reported FX headwinds. So I like Microsoft, nothing against Microsoft, just believe that, Palo Alto, again, will be more defensive in an environment like we're in today. For a company like Match, it really goes back to, global dating the world's reopening. Japan's their second largest country. That's reopening now, where you don't need a visa or a tour guide to get in. So we think there's some interesting opportunities there as well, given how poorly the stock is done.
Right, and matches up 5%. Brent, thank you for walking us through your playbook. Brent Phil.
Alrighty, coming up next, today's Clean Start. As renewable technology advances, how do we properly recycle the older components? That's where Solar Cycle comes in. And as we head to break, throughout Hispanic Heritage Month, we celebrate our CNBC teammates, contributors, and guests. Here's Saul Trujillo, Unblocked Media.
The punchline here is that the Latino cohort generates $2.7 trillion in GDP. Now, when we think about the significance of labor force providing 80% of net new workplace entrants, growing consumption at 2x the rate of the rest of the economy, it's something that any investor, any executive, any person that's thinking about the sustainability of our competitiveness in this country should be aware of, think about, invest in, and catalyze.
When do we get to the stars and the people?
Welcome home. Get ready for a new season of Below Deck Men. There's no room for error. The all-new episode of Below Deck Men is streaming right now on Peacock. And watch every Monday night at 8 on Bravo.
No harmful pesticides. High quality ingredients. Stony Bay Road. Good on purpose.
I was having relationship issues with my old bank. It was just take. So I moved to SoFi Checking and Savings. Get 2.00% interest and earn up to $300 when you set up direct deposit. SoFi, get your money right.
A solar panel is probably one of the greatest things you can think of, but when that solar panel gets old, worn out, it becomes garbage, just like everything else. But what if even the oldest panels could be recycled and reused? Diana Orlick joins us now with more on that in her continuing series on climate startups. Hi, Di.
Hey, Ty. Yeah, the U.S. alone could see about 1 million metric tons of solar panel waste by 2030 as older models either fail or are replaced by more powerful new ones. But it doesn't have to be waste, according to a startup called Solar Cycle.
We are applying very advanced technology to recycle solar panels to extract all the key materials out of these panels. They have a lot of valuable materials that can be put back into the supply chain.
Solar Cycle claims it can inexpensively extract 95% of the high-value materials in solar panels, like silver, silicon, copper, and aluminum. They can then be repurposed or returned to the supply chain, creating a circular solar economy.
We're seeing increasing volumes that need to be recycled, and what we want to do is avoid having those go into landfill.
Partnering with Sunrun, one of the largest solar services providers in the U.S., is allowing the barely one-year-old company to recycle at scale. It is absolutely cost-effective in the context of what our customers desire for us to be doing and the future of solar panels and the clean energy revolution. Not only cost-effective, but valuable. Recyclable materials from solar panels could be worth more than $2.7 billion by 2030. Up from $170 million this year, according to Rystad Energy. While Solar Cycle is still in very early stages, Sharma says the company is quickly seeing high demand. Investors include Lyndon Reeve of SunPower, Peter Reeve of Solar City, Closed Loop Partners, and Urban Innovation Fund. Total funding to date, $6.6 million. Sharma says there is surprisingly little competition in solar recycling because the technology was lagging, causing a gap in the market. The recycling that was available was far more expensive and rudimentary. But solar technology is advancing rapidly, making new panels far more efficient and older ones far less useful, hence the growing need for recycling. Tyler?
All right, we try to think of solar technology, Diana, as something relatively new. So why are we dealing with so much potential waste already?
Well, Tyler, because a lot of people don't realize how much the solar industry has scaled and how large it's already become. If you look back last year in the U.S., solar panels accounted for more than 50% of all new power generation capacity that went into the United States. That means the older panels are also being replaced and need to be recycled, Tyler.
All right, Diana, thank you very much, Diana. Oh, report it.
So Tesla shares are down nearly 8%. The company delivering fewer vehicles than most was hoping for. Factory pickups, commodity prices, and executive turnover having an impact. We will trade it in today's pre-stock lunch. This, as the Dow is just marching higher with the index on pace for its best day since November 2020. We are at second highest.
Live from Ukraine, from Uvalde, Texas, from Mayfield, Kentucky. To cover the news, you have to be here. This is how so many towns and cities are protecting themselves. You can actually see they're pushing the gates open. Was there a school officer on campus? That's what we've been told. No, do you remember any tornado as bad as this one? You look at this and you're thinking, we're not going to have power for weeks, if not money. Exactly. Every night, it's your news players. Top story with John Ellis. He plans at 7 on NBC News Now.
Here's a look at your next true crime obsession. Snapped. A couple that was on the lake just enjoying themselves come around a curve and see a human leg.
They had been walking along the way, found this leg partially wrapped up in a plastic bag, and then called the authorities right away when they found it.
There's no distinguishing marks, but it's a leg of an African American.
The wound itself appeared to have been cut with some sort of saw or a bladed instrument. It wasn't a rough cut like you would see with an animal attack or an accidental dismemberment, something like that. This was a straight, clean cut all the way through.
They were able to compare the DNA, and it was George's leg.
Only Oxygen True Crime has snapped every Sunday at 6. Oxygen. We live and breathe true crime.
The day's biggest political stories with trusted insight now and expert analysis now. A daily look at the politics behind the headlines. Meet the Press Now, streaming weekdays at 4 p.m. on NBC News Now.
Welcome back to today. We have a lot to celebrate on this Wednesday morning. It's good to have you along with us.
You don't know when the moment's coming, but when it does, you take it.
Everybody away! I got it!
All right, time for today's three-stock lunch. We trade names on the move this day. Chevron, the best performing stock in the Dow, up about 5%. Stanley Black & Decker also up 5% on the report. It's cutting jobs to trim costs. And shares of Tesla, that's the problem child here today, off about 8% on disappointing deliveries. Let's trade the names with Ava Ottos, Chief Investment Strategist at ER Shares. Ava, welcome. Good to have you with us. Let's talk Chevron first, shall we?
Yes, Chevron is a buy. We like it in this market. It has a 4% dividend yield. It has very good margins. In fact, the margins are double their industry average. And most importantly, it's uniquely positioned between Russia and the West. Many people don't know this, but more than 20 years ago, Chevron used to be a small to middle-sized company until they took over the Kazakh oil field, which put them in the map and brought them to the next level. And now that Kazakhstan, with Russia gone, is the second biggest provider to Europe. And given the fact that Chevron's more than 50% of Chevron's revenue comes from international, that's going to continue to benefit Chevron in the long-term future.
Ava, what about Stanley Black & Decker?
So that itself, its fundamentals do not look good at all. In fact, their margins have been steadily deteriorating over the last 5 years. Their gross margin and their EBITDA margins have dropped in the last year by 10%, and its EBITDA growth is negative, minus 30%. So its fundamentals do not look good. Its inventory is rising, and when combined with decreasing margins, that suggests they cannot sell products, and their short-term debt has increased to $6 billion. And when they have only about $300 million in cash, that suggests a significant refinancing risk.
Let's move quickly to Tesla. We're a little tight on time, so a quick phrase or two.
At best of all, we are seeing today sensitivity to their sales. They're trading at 10 times the industry multiple with a revenue growth, which is also 10 times the industry, which means that investors just like us are highly sensitive to any disappointment when it comes to future sales of Tesla. And given the high interest rates, which does not help big ticket sales and the recession environment we are heading to and the competition, I do not think it's the best company to own, so to hold at best.
Ava, thank you very much. Ava Adams of ER Shares. We appreciate your time today.
Draw your attention to emerging market hires today, along with stocks here in the U.S. We got those details next.
Chicago Wednesday is TV's #1 added draw. When this community calls, you respond every single day.
One city.
One family, one Chicago, stronger together. Chicago Wednesdays on NBC.
Why is my name so hard for him? You and Glenn would make a great team. I want the best for him. You want the worst for me? Both can be true.
The Voice, Mondays and Tuesdays on NBC.
Halloween eggs. It's just from classics to new exclusives, streaming now. The day's biggest political stories with trusted insight now and expert analysis now. With a daily look at the politics behind the headlines. Meet the Press Now, streaming weekdays at 4 p.m. on NBC News Now.
The investing club is a dream for me. The most exciting part of the dream is the morning meeting. I love it because it is unrestrained and it is unplugged. 10 minutes will give you everything we know about the market.
Scan the code to join and never miss the morning meeting.
launched down about 900 points. Also keeping an eye on emerging markets. A big weekend in Brazil with markets moving closer than anticipated first round of Brazil's presidential election. No candidate getting a majority of the vote. However, current president Jair Bolsonaro did see stronger than expected support over opposition candidate Lula da Silva, the former president who was forecasted to win. And you can see the market reaction. The EWZ, the iShares Brazil ETF, up 10% today. And state-owned companies such as Petrobras, Banco de Brazil, soaring as well. And Bolsonaro is seen as more business-friendly than Da Silva. The election now heads to a runoff vote tower on October 30th. Bolsonaro has said if he doesn't win, he will contest the election.
We've heard of that tactic before.
Somewhere else.
We've heard that tactic before, but I think it's very interesting that the business world sees Bolsonaro as so much more favorable to their interests than Lula.
He has that economic agenda. He's been promising that. Will he deliver if he does in fact win again? Down like a 33% here, Tyler.
All right, thanks for watching Power Lunch.
Closing bell begins right now.
Stocks having a strong start to the fourth quarter. Gains across the board, growing at year session highs. Dow having its best day since 2020. We're all about your money in this final hour of trading. Welcome to Closing Bell. I'm Carl Pete today at Interest Fair Eisen. Let's check out where things stand this afternoon. Dow, as we said, on pace for the best day since November 2020. 91 day, all sectors green. Lower yields definitely helping today, 10-year below 365. And then check out energy today as oil rallies back to 83 and change ahead of that OPEC Plus meeting later in the week. Coming up on today's show, shares of Box are skyrocketing after Morgan Stanley ups the stocks of overweight, citing some bullishness around return to work. We're going to talk to Box CEO Aaron Levy, get his read on enterprise tech spending. Well, let's get straight to this market and this strong beginning to the fourth quarter. Joining us today, Jefferies Chief Market Strategist David Zervos with us. David, great to see you. We spoke last week. It sounded like you had spent some time talking some clients off the ledge. Does that get any easier today?
Yeah, Carl, I guess it does. The 3% up move certainly feels a little better. Although we had a pretty rough ending to the week, so it's not all clear by any means. But I think the big story was really financial instability between the Bank of England, between the rumors about Credit Suisse, and I think the continuation of this whole story of central banks trying to kind of deal with financial stability issues and at the same time deal with inflation. It's got a lot of clients very confused, and rightly so. But I do think they're going to separate that out, and I think at the end of the day, there's more silver linings here than not.
Yeah, we've seen Fed funds come off of their highs. Looking at 4.4 now for March. 2-year got within 7 basis points of 4 today. Do you think we have seen the peak in some yields?
I think we're pretty close to it, Carl. I've been of the opinion that after they get to sort of something in the 4s, maybe mid 4s, they're gonna take a pause, have a look at what happens, and also if they need to do more, I think they may end up focusing a little bit more on the balance sheet. I think politically taking short rates up too much starts to really get it starts to raise a little bit of eyebrows on Capitol Hill too, because they're paying so much interest on reserves, so much money going back to the banks. It's just going to get people like Elizabeth Warren and Rand Paul very hot and bothered. And I think there's other ways to pull some punch away from the table, stepping up asset sales if they need to. So I think they can take the pause. They'll be able to. Inflation expectations look very well behaved. I don't know if you've seen the 5-year break even today. Looked like last I looked they were at 208. Coming down, the curve inverting a little bit more. So all that is sort of helpful to the Fed's cause of having anchored long-run inflation expectations, which is really, this is the goal. This is what they need. And the more they get that, the more they can kind of look through some of the short-term issues with inflation not coming down maybe as fast as they want it to over the next couple of years.
To your point about political pressure, today the Journal piece on the UN calling on the Fed and other central banks to halt interest rate hikes. Stories on the table over the weekend about Brainerd and Daly sort of looking at the downside of hiking too much, too fast. Do you think the Doug Hawk chatter right now is becoming more balanced?
At the margin, I would say yes, and I think there's 2 reasons. One is back at Jackson Hole, we had the equity market up at 4,200. Now we have the equity market, ending the quarter below 3,600. They've done a lot to tighten financial conditions,
and they can kind of ease back on us a little bit. I don't think they liked the idea going into Jackson Hole that the market was pricing in almost no landing. Not just a soft landing, but almost no landing. And now we're getting to the point of taking a soft landing and making it a little more of a hard landing. And I think the Fed probably pushes back on that a little bit. That and the combination of what some of the break-evens have done, I think gives them confidence. You know, look, it's not a pivot call. It's not going to be like we're going to get some major change. It's just that the rhetoric's going to sound a little less nasty. And I think the market needed to hear that up at 4,200 on the S&P. And now they can kind of, you know, take their foot off our neck, so to speak.
Right. Well, you mentioned stability and some of the concerns over the weekend, especially regarding some big European banks. We want to get more on that situation, David. Stay with us. Let's talk specifically about Credit Suisse after the slew of social media speculation over the weekend about problems there. Leslie Picker's been all over that story.
Hey, Carl, a lot of concern out there on social media this weekend that Credit Suisse was the canary in the coal mine for the health of the financial system. But based on the way Credit Suisse and its large banking peers are currently trading, it doesn't appear the market is too concerned about a broader systemic risk, at least at this time. But at least as it pertains to CS, a lot of the uncertainties and questions surrounding the firm are expected to be answered later this month. That's when the firm's reported transformation plan is set to be unveiled when it reports third quarter earnings. The overhaul itself is expected to consist of divestitures and restructuring of various units, including reportedly siphoning off risky assets. Analysts estimate, though, that this process could be very costly. KBW says along the order of $6 billion. Asset sales and divestitures could fund some of that, but there's a general concern out there that Credit Suisse will also need to tap the public markets for what could be a dilutive equity raise. Now, sources tell me that's not something they're engaging in right now, but it is kind of a catch-22 because investors wouldn't want to buy or be marketed newly issued shares without knowing what the transformation plan is and what the Q3 numbers look like. So as a result, it's likely we will see a lot more volatility in this name until the market gets more clarity. Carl?
Leslie, I guess something you've been talking about all morning is whether or not the market will be patient enough to wait for that update on the 27th or whether they're going to have to announce something in the interim.
That's right. It's a very, very good question. Will the market allow them to do that? Because, I mean, obviously the shares have reversed. They're up about 2% right now. But how they keep getting lower and lower and lower, that becomes a much more punitive equity raise if that's what they need and choose to do. And of course, where you see the bonds are trading as well, makes any kind of financing event much more expensive, makes asset sales and divestitures look more desperate. If the market is basically saying we see this as more of a distressed entity, the longer you wait, the more uncertainty that's out there, that's the risk that you take. And so I have no direct evidence that they're going to pre-announce earnings, that they're going to unveil this transformation plan any earlier. The CEO only took the helm in July, and they're already doing this at pretty light speed in just 3 months, just doing a complete overhaul of this massive bank. And so I don't think you can really hang your hat on anything coming earlier. That said, the market is going to be quite choppy, I would guess, until October 27th, if that is indeed the date.
Yeah, still a ways away. Leslie, thanks for that. Leslie Picker watching Credit Suisse for us today. David, I know one thing you've been hammering is that there are better firewalls in place today than there were going into the great financial crisis.
You know, there are, Carl, and you know, I think our central banks have learned a whole heck of a lot in the last 14 years on how to kind of dissect financial stability from monetary policy. I think they've gotten good at it. I think they'll continue to get good at it, and I think they'll do it. And I think they will continue this inflation fight. And you know, it's not. Don't get too excited about some big pivot to save Credit Suisse or the Italy or the pension funds in the UK. They will target what's needed to kind of put out forced selling related systemic risks, and I think they've got facilities and structures that they can use to do that. But I think they're going to stay pretty committed across all of these central banks to this inflation fight, and the market should be in the long run applauding that, Carl, because there's nothing worse for the market in the long run than losing anchored long run inflation expectations. Been a big message of ours at Jefferies. continues to be the message today. We got to take some short-run pain to get to the long-run game, and I'm excited to see that, our central banks, in particular led by the Federal Reserve, have been so diligent in their fight against losing any anchoring. And you pointed out that the politics of the UN, the politics is only going to get worse here, but they've come a long way fast. They still have a lot of room on the job market that they can play with. And, I think the market's going to actually, in the end, after all this turmoil, reward any central bank that continues to be quite stalwart in its fight against inflation over the life.
David, that's good stuff. Appreciate it as always. Thanks for kicking off the hour with us. David Zervos.
Always
on hours. Meantime, shares of cloud software company Box handily outperforming the market this year and getting a nice boost today on this upgrade over at Morgan Stanley. We're going to talk to Box CEO Aaron Levy about the call and his forecast for cloud and software in Q4. And you are watching Closing Bell on CNBC.
Here's a look at your next true crime obsession. Snapped.
On the night of June 13, 1980, the charm of Wiley is shattered when President Richard Parker receives a panicked phone call around 11 p.m. from his neighbor, Alan Gore.
Alan Gore was in Minnesota on a business trip saying, I can't get my wife to answer the phone. Something must be wrong. He started getting really concerned after several hours.
Richard agrees to check in on Alan's 30-year-old wife, Beth Gore, and recruits neighbors to go with him.
We went around front and we assumed that the front door would be locked. And one of them, just by chance, tried the door and it opened.
The men cautiously enter the home, calling out for Betty, but the only response is a chilling cry.
Well, the Oxygen True Crime has snapped every Sunday at 6. Oxygen. We live and breathe true crime.
Peacock Scream for biggest sports and live events from Notre Dame football and Sunday night football to football. Featuring birdies, eagles, horses, and goats. The custom epic stand-up to NFL kickoff. If it brings fans to their feet, it's streamed on Peacock.
Why is my name so hard for him? You and Glenn would make a great team. I want the best for him. You want the worst for me? Both can be true.
Of course, Mondays and Tuesdays on ABC. My business is to keep things moving. At Office Depot, Office Max keeps us on the ball. With check the train anywhere or cleaning supplies in the gym. Push it over. It's how I keep my business going. Buy online, pick up in store in 30 minutes. Look at free next business day shipping. Acumatica delivers flexibility, efficiency, and continuity of operations to grow and small and mid-market organizations. Acumatica, the cloud ERP.
Shares of Box giving a big lift today, up more than 9%. Morgan Stanley ups to outperform with a target of 34. They say the value is underappreciated. Company will be hosting its BoxWorks event this week. And joining us in a Closing Bell exclusive is the Box CEO, Aaron Levy. Aaron, great to have you. Thanks for the time. I'm sure you don't have a problem with the call out of Morgan Stanley today. They do point out higher net retention, lower churn, better deal momentum? I mean, thematically, is everything they're saying here in the right direction?
Yeah, we're obviously happy about that, the upgrade, and a lot of that was kind of what we talked about in our last quarterly earnings call. Obviously the state of software right now is very dynamic. We've tried to put ourselves in a position where we're both driving both, durable, steady growth as well as increased profitability over time. And our platform is 100% focused on helping companies make the most out of their most valuable information, protecting their content, securing their data, helping automate workflows, and then ultimately lowering their cost of ownership of maybe, their legacy and traditional systems as they move more of that data to the cloud.
Yeah, now one point they do make is that you're not immune to macro headwinds, and you talked about challenges for all kinds of businesses in all corners of the world. I mean, how acute are those when it comes to Box?
Yeah, I don't think any company is immune that's out there right now. I mean, we're all in an interconnected economy, and what we are really focused on is helping businesses that need to be able to operate more efficiently, be able to save money by moving more to the cloud, being able to reduce their vendor landscape by having a consolidated offering for managing their most important content. That has been our message to customers, and I think it's resonating quite well right now, and helping customers really deal with this very dynamic environment. So very hard to obviously predict what's going to happen next in the market and the overall economy, but we've tried to make sure that we're helping our customers in this environment, get more efficient, save money, and protect their most important data.
Right. So implications then for your own revenue targets as investors are rained upon with news about macro headwinds?
I would say that I would just go off of our last earnings call where, we again have talked about that, our focus is helping customers in this situation. We were able to maintain our revenue guidance that we had put out for the full year, as well as improve some of the bottom line targets. So that was certainly our message in the last earnings call. And overall, we're really, excited to continue to innovate on our platform. We have a massive conference this week. Where we'll be announcing all new functionality and rolling out new products that will help customers both with distributed work and digital transformation and helping secure their most important content. And then again, very dynamic environment that we're in right now, and our job is just to help customers manage the most important information through this.
Yeah. One part of that dynamism, I guess, is this willingness of tech companies to really start to get serious about costs, about efficiencies. We've heard it from Google. We've heard it from Meta. Crunchbase has a tally now of tech workers that have been laid off this year. They say it's up to 42,000. What's your sense right now about whether or not they have implemented these enough, or whether you think Q3 earnings season is just going to be another washout of hunkered down memos?
I don't want to do any breaking news across the industry, in this conversation, but I do think that there is a broad-based change happening right now in the tech industry, where there's a number of years of valuations that only could go up higher. Obviously, growth rates that were in some cases, probably hard to sustain just given the rate of growth that you were seeing, greater than 100 or 200% growth of at-scale companies, which were obviously phenomenal, but eventually have to come down to some degree. And then cost bases that were built into those growth rates. And so I think you're seeing the industry really have to react to that, where, we know that over the long run, companies are going to be measured by how profitable they are and the durability of their growth. And so I think companies are having to really transition to this new mode of operating, whether it's small Series A or B startups or some of the world's largest companies are grappling with this new reality. So hard to say what we're going to see in the Q3 earnings season. But I do think that the tech industry is going through an evolution where you're going to see greater degrees of focus on profitability and long-term durable, more sustained ways of growing.
Yeah, I wonder who wins in that scenario. Aaron, for example, we've talked a lot about the number of engineers that are likely getting let go at some tech companies. But then just in the last couple of weeks, American Express, JP Morgan reiterating they've hired a couple thousand tech workers this year, and they're going to add maybe a couple thousand more before the year's out.
Yeah, I think, if you just remove the sort of near-term or individual or isolated, kind of pressures that companies might be facing or reacting to, and you sort of step back and you say, okay, what are the long-term trends that every enterprise is dealing with? Digital transformation still is a core focus area of every enterprise on the planet. remote and distributed work, being able to serve our customers with better experiences, the role that AI will have in the future on business operations and customer experiences. So you kind of think of these macro trends, not economic trends, but macro business trends, and they still all point towards more digitization, more movement to the cloud, more modernizing of IT infrastructure. So I think you're still going to see, large amounts of growth in tech, whether that's on the startup side or you mentioned some more kind of traditional, in this case, financial institutions that have to invest in technology. But in every business that we talk to, there's still a meaningful investment going into technology and digital transformation. And so whether you have some, fits and starts, in the next couple of quarters or not, over the long run, it's very clear that this is still the wave of the future. Which means it's a great time to be in technology or building technology or serving customers in a tech-oriented way.
All right. Hey, finally, I know we already chat with you about Web3, blockchain, NFTs, where we're quarter-on-quarter sales is still falling. Troublesome headlines regarding Celsius and Kardashian FCC. What do you think? Are we making a turn here in terms of how fierce regulators are going to get?
I think there's some clues that are more symbolic in nature. The Kardashian thing, it's hard to understand how that's different than a lot of the kind of promotions that are happening. But it is, I think interesting to watch that regulation has, started to emerge. I have a really simple way of thinking about it, which is, what is the underlying thing that you're buying or selling, and does that thing only go up in value if somebody else in the future believes that value versus there's underlying utility or cash flow. And I think, unfortunately, in the case of crypto, there's a lot of, spaces that don't really offer any kind of core utility or underlying resource that is valuable. And so that means that you'll probably still have in many categories prices coming down, where there's actually not really any bottom until zero. And I think the question then is, what does regulation look like? How do you decide what ends up being a security versus a commodity? And those are things that obviously the regulators are going to have to figure out. But it was clearly a space that had way too much hype and buzz for what it was delivering on.
Yeah, and regulation, as we know, often lags the technology, certainly frustrating to some. Aaron, I guess I'll say congratulations on the Morgan Stanley call. It's great to talk to you. Good luck this week. Thanks for the time.
Thanks, man. Appreciate it.
Meantime, some comments from New York Fed President John Goldman as he talks in Phoenix. Goldman saying, quote, tighter monetary policy has begun to cool demand and reduce inflationary pressures, but our job is not yet done. Goldman also says inflation could fall to 3% next year and close to the 2% target, quote, in the next few years. Let's check the markets here this afternoon. Dow just got recession highs at 868. S&P still a strong score from 4,700. Still down again. Capital's John Kilduff is on this. We'll talk about today's surge in oil as OPEC reportedly made this big cut to output this week. First up, today's stock mover could be a real treat for investors. Looking at the deal happening next. And we go to break. Check out some of today's top search tickers on CNBC.com. Once again, the 10-year Treasury is the top spot, followed by Tesla. Apple, the 2-year in the S&P.
So fun. I did a game where I set my minimum price at $1 million. There's out to infinity pool. Infinity fun. For a darn area on my favorite celebrity house and potential neighbors. Or these words. First walk in and choose to comfort around bubble bath. You can also search for homes you want to live in. Free ones. Storeroaster.com or download the app today. Hot.com. Guaranteed the first benefits for all.
The thing is, living with HIV, I want to understand the technical pure medicines. That's why I switched to the Bible.
All of this for some adults who are starting HIV with treatment or replacing their current HIV regimen.
Detect this. No other complete HIV pill uses pure medicines to help keep you undetected within the body.
Detect this. Most HIV pills contain 3 or 4 medicines. Divided is as effective with just 2. Research shows people who take HIV treatment as prescribed and get to and stay undetectable can no longer transmit HIV through sex. Don't take Divallo if you're allergic to its ingredients. Or if you take Divallo, taking Divallo with Divallo can cause serious or life-threatening side effects. Hepatitis B can become harder to treat while on Divallo. Don't stop Divallo without talking to your doctor. As your hepatitis B may worsen or become life-threatening. Serious or life-threatening side effects can occur, including allergic reactions, lactic acid buildup, and liver problems.
If you have a rash or other allergic reaction symptoms, stop the doctor and get medical help right away. Tell your doctor if you have kidney or liver problems, or if you are, maybe, or plan to be pregnant without any harm under the baby. Use effective birth control while on the bottle. Do not breastfeed while taking the bottle. Most common side effects are headache, nausea, diarrhea, trouble sleeping, tiredness, and anxiety.
Detect this. I stand detectable with fewer medicines. Ask your doctor about switching to the bottle.
No, I think this is I thought it was still even good. I'm focused. You want this. Provided to loyal customers. Get started with serving with you today.
Someday, give you credit card rewards. But make you jump in hoops to use them. With Discover, you can redeem your rewards for cash in any amount, anytime.
Our consulting model breaks the mold with a bespoke approach to everything. We unlock connections that empower the breakthrough to perform the vision and deliver the purpose. Let's move on.
Stock, according to Darren, the pet food company is hiring bankers to explore possible sale. The move is a howling success for activist investor Dana Partners, which recently took a nearly 10% stake in Fresh Pet in the hopes of persuading the company to pursue sale. Stocks meantime soaring today, down to 872 as yields fall from that nearly 10-year high. Our next step is deals where investors might be seeking some safety with inflation and recession fears still lingering.
Join the biggest boxing community in the world without leaving your home. Fight them.
A new generation of baby has around, making family efficient. We're just a problem of campus food without any extra ingredients, and it tastes like heaven because no provider makes great pasta. Thanks, a few pence. Marcus Michael and Sachs has a high-yield savings account with a rate that is 4 times the national average. That account. Few pence. Good money.
Oh man, I've been recording this the whole time. That sucks. So I'll press pause.